In the last session, we have solved working notes to problem number 7. In this session, we shall complete problem number 7 by preparing the ledger accounts and the balance sheet. The usual accounts: revaluation, partner's capital, the one who retires his loan account, seized loan account, goodwill, and the balance sheet as on the date of retirement. Let's start with the balance sheet. The first is sundry creditors, rupees 10,000. Creditors is a liability. We'll record that as a liability. There is no adjustment on creditors, so let creditors come in the outer column. 10,000. Bank overdraft 20,000. In the working notes we have seen in the last session, there is some outstanding interest on bank overdraft. So let us take a bank overdraft in the inner column. Bank overdraft is again a liability. Inner column 20,000, and then we'll leave a line for that. After this, what we have is reserve fund. We'll transfer reserve fund to capital after taking the capital balances. So let's see first what are the capitals of A, B and C. 30,000, 40,000, 50,000. Capitals in capital account. By balance brought down. 30,000, 40,000 and 50,000. Once you finish checking the capitals, then the reserve fund. When you transfer reserve fund to capital, as we have learned earlier, your capital balance will increase. Increase in capital is increase in liability. We credit by reserve fund. Now, the amount of reserve fund in the balance sheet is 18,000. We have prepared working note number 1 for that to distribute in equal ratio, as the ratio is missing in the problem. Equal ratio 1:1:1. We have got the distribution as 6,000 each. Now, once we complete with this capitals and reserve fund, check out what is the next in the balance sheet. On the liability side, profit and loss 6,000. Liability side profit and loss is given. That means that is a credit balance. Credit balance means it's a profit. Profit will increase your capital balance by profit and loss account. It's 6,000. Distribution 2,000 rupees each. Into bracket will specify as profit. That's all with the liability side. Assets. Now we can take up the assets as given, or first start with the fixed assets, end up with the current assets. Let us start with the fixed assets. When you record fixed assets, remember first line for goodwill you keep it blank. If there is goodwill balance, we need to record it there. So after leaving the line for goodwill, see at the end of the balance sheet, which is the fixed asset? Building. Building has a adjustment. So let us take a building 30,000 in the inner column. After leaving a line for goodwill, if any, 30,000. Immediately a line is left. Above buildings, we have plant and machinery 29,000. On that also we have adjustment. So let us take that in the inner column. Plant and machinery 29,000. After plant and machinery, furniture, on that also we have adjustment. So furniture 20,000 in the inner column again. Now, furniture is over. Then comes his patents. Patents is an intangible asset. On that, but there is no adjustment. We'll take a patents amount in the outer column. Patents 10,000 rupees. No adjustment. We have shown that direct in the outer column. Bills receivable 11,000. Again, there is no adjustment at all on bills receivable. That also will take up in the outer column. Bills receivable 11,000 rupees. Then comes debtors. On debtors we have the provisions. So what we'll do is debtors original value in the balance sheet 40,000. 1,000 is minus from that and shown 39,000. We'll take the original value 40,000 in the inner column. 40,000. And a line will be left to do the adjustment. The next, stock, 25,000. There is no adjustment on stock, so stock will record in the outer column. $25,000. After stock, cash. There is no such adjustment which shows any flow of cash, whether cash comes in or cash goes out. So cash direct in the balance sheet without opening cash account. Full amount, 10,000. That's all with the asset side, that's all with the balance sheet. Now let us take up the adjustments. On the above date, that is 1118, C retires and the following adjustments are made. Depreciate machinery and plant and machinery by 10%. So let us, depreciation decreases the value of asset. Decrease in the value of asset is an loss. Revaluation account debit side, then will minus it from the respective assets. Depreciation is 10%. 10% of plant and machinery, 29,000. 10%, 2,900. Immediately, we will adjust that in the balance sheet. Depreciation decreases the value of asset. From furniture, minus its depreciation. From furniture, 2,000 is minus 18,000. From plant and machinery, we minus 2,900. In the outer column, 26,100. Let us see what is the next adjustment. Maintain provision for doubtful debts at 5%. A note is done in the last session. What we do? 5%. 5% of what? 40,000. How much we get? 2,000. Already in the balance sheet, 1,000 provisions are there. Old provisions 1,000. New 2,000. Increase in the provision is increase in the loss by 1,000. Increase in the loss, revaluation account on the debit side. 2. Provision for doubtful debts, rupees 1,000. Second, we have to minus it from debtors. What to minus from debtors? The difference, increase, decrease or new value? Always new value. Difference is adjusted in revaluation. What is the new value? 2,000. That 2,000 will minus it from debtors. Less PDD. That is provision for doubtful debts. And then debtors in the outer column, what we get is 38,000. Next adjustment is appreciation on building by 20%. Appreciation increases the value of asset. Increase in the value of asset is the income. By buildings, appreciation is 20%. 20% of 30,000. What we get is 6,000 rupees. As I said, appreciation increases the value of asset. Let us add it to buildings to increase its value. Add 6,000. So buildings in the outer column, 36,000. Next, interest on bank overdraft at 20% per annum was outstanding for 9 months. A note is done. And what we got is 3,000. 20,000 into 20%, 4,000. For 9 months means into 9 upon 12. 4,000 to 9 upon 12, what we have got is 3,000 rupees. Interest on bank overdraft is income or expenditure? Expenditure, because bank OD is a liability. It's a loan, unsecured loan. Interest on loan is always expenditure as we have to pay it. It's an expenditure. Will record it in revaluation account debit side. Rupees 3,000. How much is the bank OD? 20. On that, 3,000 is outstanding interest. So how much we have to pay to the bank? 20,000 bank OD plus 3,000 interest. 23,000 we have to pay. So let us add outstanding interest here. We can add it here or show it separately. 3,000. So total bank overdraft amount payable to the bank will be 23,000. Next, Goodwill of the business was valued at 3 times the average profit of the last 5 years, and the profits losses are been given. We have done the working note for that. By using average profit method, we first got the goodwill as 30,000. In the next note, that 30,000 goodwill we have distributed in equal ratio. What you get is 10,000 each. Entry for goodwill raised at its full value, because they are not mentioned. Retiring partner share is raised or goodwill is directly adjusted. That means goodwill is raised at its full value. What the entry will be? Goodwill is an asset. When you value goodwill account debit. We transfer that to capital account also will increase. Goodwill account debit to capital account. Let us record that first in goodwill account. On the debit side, in the names of the partners, 10,000 rupees each. A's account, B's account and C's account. Let us transfer that to their partner's capital account by goodwill. $10,000 each. If goodwill is withdrawn, then comes the next entry. Continuing partners account debit to goodwill account. It's not withdrawn, that goodwill withdrawn entry will not pass. Last adjustment. Rent is outstanding ₹100. Rent is an expenditure. Let us record that in revaluation account. 2. Outstanding rent ₹100. An expenditure is outstanding. Asset or liability? Outstanding expenditure means what? That is the amount what we have to pay. What we have to pay is always a liability. Let us record that as a liability. Outstanding rent ₹100. That's all with all the transactions. Now let us balance the accounts. First we'll balance our revaluation account. Now revaluation account you can find out. Debit side total is more. How much is debit side total? 4, 5, 8 and this is 9,000. From this 9,000, when you minus 6,000, we get a debit balance of 3,000. Debit balance. Profit or loss? Loss. Credit balance is a profit. So first, we have to transfer this to the capital account of the partners. What we get is 1,000 each. $3,000. Into bracket, we'll specify this as loss. We'll transfer this to partners capital account loss. Which side? Credit or on the debit side? Loss when you transfer to capital, your capital will decrease. Decrease in capital we debit. It's an entry on the credit side. When you post, it will be on the debit side only. Let us transfer that to revaluation account. Now let us balance our partners capital account. First, we'll balance the retiring partners account. Then the continuing partners. Who retired? C. So that's going to be 56 and 258 and this 10. 68,000. So from this 68,000 minus 1,000, we get a balance of 67,000. Is it mentioned anywhere in the problem that the retiring partner is paid some cash and all? No. We have to pay him 67. It is not mentioned that the cash is paid. That means that 67,000 still the partnership business has to pay to C. We'll show that as C's loan account into bracket balance payable. Transfer this immediately to C's loan account onto the credit side as by C's capital account. That is the amount what we have to pay, 67,000. Now, once you finish this, we'll balance the remaining partners. A and B. A's total 36 and 2 38 and 10. 48. This is 58,000. So that's going to be 48 and 58. When you minus 1,000 loss, the balance what remains is 47,000 and 57,000. Whatever balance remains in capital, we transfer that to the balance sheet and we show it here as two balance. Carry it down quickly. We'll carry forward that to the balance sheet. Balance sheet 1,04,000. That's all with the capital account. Let us balance C's loan. 67,000 is the total. We have not paid any cash towards his loan, so the balance also is 67,000. Whatever balance we get, we show it as two balance carried down. Carried down where? Carried down to the balance sheet. Carry forward it to the balance sheet. C's loan account 67,000. The last account to balance is goodwill. Let us balance goodwill account. Total is 30,000. No goodwill is withdrawn. So goodwill account also shows a balance of 30,000. What we take it as? By balance carried down. Carried down. Where? Carry forward it to the balance sheet. On the very first line, the line that we have left for that. Goodwill 30,000. That's all with the problem. Let's total the balance sheet. It should tally. Let's see. This is 10 and 23. 33 plus 1,04,000 is 1,37,000. 1,37,000 and the 67 is 2,04,000. 2,04,100. 2,04,100. When you total the asset side, 30, 36, 26, 18, 10, 11, 38, 25 and 10, the total is 2,04,100. Assets and liabilities are same. The balance sheet tallies. In this session, we have solved problem number 7. In the next session, we shall start with problem number 8. Thank you.